All right, so looks like we're diving deep into some serious savings strategies today. We got a whole bunch of info here on cash value life insurance,
Yeah.
specifically some excerpts from Supercharged savings with cash value life insurance.
Right. Okay.
Now, life insurance, it's not exactly the most exciting topic.
It's not the first thing that comes to mind when you think about like exciting financial stuff, right?
Exactly, but trust me, this deep dive might just change the way you think about building wealth.
Yeah, I think a lot of people, when they hear life insurance, they think of just like, that safety net for your family, like if something were to happen.
Right, right.
But it can be so much more than that.
Absolutely. And this story about Jim in the material really brings that home.
Yeah.
He bought this policy like 24 years ago from his brother, more out of obligation than anything else. And it ended up being his best performing investment
Wow.
out of everything he's done financially.
Like he just stumbled into that.
Talk about a happy accident, right?
Totally. Yeah, that's pretty amazing.
So let's dig into this a little bit. The growth potential of cash value life insurance.
Okay.
We've got this Mass Mutual case study that shows pretty consistent returns between like 5.65 and 6.22% over a 33-year period from 1980 to 2013.
Wow.
Now, I know those numbers might not sound super exciting right off the bat.
Right. It's not like winning the lottery or something.
Exactly. But look at this.
Yeah.
Crestmont research shows that the S&P 500 only earned 0% over the last 5 years.
Oh, wow.
And like a measly 2% over the past decade.
Huh. So that steady like 6% is looking a lot better now.
Right. Suddenly it's like, whoa.
Yeah.
Especially when you consider the consistency and the low risk of cash value life insurance.
Yeah, it's like slow and steady wins the race, right?
It is. It really is.
Especially with something like, long-term financial growth.
Okay, now here's where things get really interesting.
Okay.
The tax advantages.
Okay.
So apparently dividends within a cash value life insurance policy, they're considered a return of premium, which means they're not taxed as long as that policy is active.
That's huge.
It's pretty awesome.
Yeah.
And then on top of that, you have the tax-free death benefit,
Yeah.
which is like a game changer when it comes to estate planning.
Yeah, absolutely.
Remember that story about Elvis Presley?
I think I know where this is going.
73% of his estate went to taxes and fees after he died.
It's crazy how much gets eaten up by that stuff.
It's unbelievable.
Yeah.
So with a cash value life insurance policy, that death benefit goes to your beneficiaries tax-free.
Yeah, that's a big deal, especially compared to other assets that are subject to estate taxes and stuff.
Right. So not only can you potentially grow your wealth tax-free while you're alive, you can pass it on without the tax man taking a huge chunk of it.
Exactly.
And that's a pretty sweet deal.
It is.
But I know what some people might be thinking.
What's that?
Wait a minute. I can get higher returns elsewhere.
Yeah, you heard that a lot.
Right. And it's true. Some investments might offer the potential for higher returns, but
And you got to look at the big picture. Cash value life insurance offers something that other investments don't.
okay, what's that?
Guaranteed access to funds.
Ooh, I like the sound of that.
Yeah, and it's like it gives you more options. You can leverage those funds for other investments.
So it's like this secret weapon in your financial arsenal.
Exactly.
And the author of this piece, he actually uses his policy to invest in real estate. And he's getting these amazing double-digit returns.
Oh, wow.
Pretty impressive.
Yeah. So it's not like an either-or thing. You can really use it to kind of like, maximize all of your investments.
No, totally. All right, so we've got these traditional cash value policies, and then there's this high cash value policy.
Yeah.
What's the difference?
Okay, so think about it like this. You can have a savings account at a regular bank, or you can have like a high-yield savings account.
Right.
Both are safe places to keep your money, but that high-yield account, it's designed to grow faster, right? So traditional cash value policies, they're kind of like that standard savings account, providing steady growth, but a little slower. And then high cash value policies, they're structured to like accelerate the growth.
So it's like choosing between a reliable sedan and a sports car.
Yeah,
Will
exactly.
both get you there.
But the sports car is going to get you there faster and with a little more style.
Yeah, and a lot more fun.
Exactly. And like a sports car, high cash value policies, they give you more flexibility and control.
Okay, I like it.
Yeah, you can adjust your premiums. You can potentially even like eliminate them entirely at some point.
Okay.
And you have more options for like accessing and using your cash value.
This is sounding less like an insurance policy and more like a really versatile financial tool.
Yeah, it really is. And that's kind of what makes it so interesting.
Okay, so we've covered a lot of ground here, but I'm sure our listeners have questions swirling around.
Probably.
So let's dive deeper into some of these nuances of high cash value life insurance in the next part of our deep dive.
Sounds good.
Okay, So we're back. And we're going to unpack some of these more nuanced concepts, like this idea of reduced paid-up policies. It sounds almost too good to be true.
It does.
You stop paying premiums, but the policy's still active, and that cash value just keeps growing.
Right.
How does that even work?
So it really comes down to like the structure of these policies and how they kind of leverage the power of compounding.
Okay.
Remember how we talked about front-loading them with cash early on?
Yeah, like that initial investment?
Yeah, that's right. And that initial infusion, it's like a snowball rolling downhill. It just keeps getting bigger.
Okay, I'm visualizing the snowball.
Very good.
So how does the snowball turn into a paid-up policy?
So as that cash value grows, it starts generating more and more dividends.
Okay.
And those dividends get reinvested right back into the policy.
Ah, so it's like fueling itself.
Yeah, exactly. It's like a self-sustaining engine powered by compound interest.
I like it.
And at a certain point, that cash value, it can generate enough returns to cover the cost of the policy itself.
Wow.
So you don't need to make those premium payments anymore.
So what happens if like the market takes a downturn? Is there a risk that those returns could drop and leave the policy uncovered?
That's a great question, and that's a concern a lot of people have. But here's the thing. High cash value policies, they have these guaranteed growth components built in.
Oh.
So even if the dividends fluctuate because of, market conditions, there's this baseline increase in cash value that the insurance company guarantees.
It's like a safety net.
Exactly. It's like a safety net that makes sure your policy stays active even if things get a little rocky.
I like it. So it's like having the potential for high growth, but with that security of a guaranteed safety net.
Yeah, exactly. You got both.
Okay, but what about control?
Okay.
Can you still access your money if you need it, even if the policy is paid up?
Absolutely. That's one of the big perks. You still have full control over your cash value. You can take loans against it. You can make withdrawals just like you could with a regular policy.
Okay.
That flexibility is what makes this so attractive for a lot of people.
It makes sense. It's not about locking your money away.
Right.
It's about having options.
Exactly.
Okay, but let's be realistic for a second.
Yeah.
Every financial strategy has pros and cons, right?
Of course.
So what are some of the potential downsides or things we should be aware of with high cash value life insurance?
Sure. So one of the main things to consider is that the initial premiums are going to be higher compared to traditional policies.
Right, because you're front-loading the cash.
Exactly. And that comes with a higher cost up front.
So it's not necessarily for everyone. You need to have a certain level of financial stability to be able to handle those bigger initial payments.
Yeah, that's a good point. It's really important to look at your own financial situation and see if this strategy makes sense for you and your budget. If you're just starting out and your cash flow is tight, a high cash value policy might not be the best fit at this point.
Makes sense. What are some other potential downsides we should keep in mind?
Another thing to think about is the potential for surrender charges. If you decide to close the policy early.
Like penalty?
Yeah, kind of. They're there to discourage people from pulling their money out too soon, and it helps the insurance company protect their investment.
Okay.
So it's really important to understand that surrender charge schedule before you commit to a policy.
Yeah, you don't want to get hit with any surprises.
Right, exactly.
So this isn't like a get-rich-quick scheme.
Not at all.
It's more of a long-term strategy.
Yeah, it really rewards patience and planning.
And you got to go into it knowing what the terms are.
Absolutely.
Now, before we move on, I want to make sure we're all clear on some of the terminology.
Sure.
Like, we keep saying cost basis and surrender charges.
Yeah.
Can you just break those down for our listener?
Yeah, so cost basis is simply the total amount of premiums that you've paid into the policy. So it's basically your investment in the policy and then surrender charges. Those are the fees you might have to pay if you close the policy before a certain amount of time has passed.
Okay.
And those charges, they usually go down over time and eventually they disappear completely.
That makes sense.
Yeah.
It's easy to get lost in the jargon sometimes.
It is.
Okay, so we've talked about these reduced paid-up policies.
Yeah.
The potential for growth, the safety net of those guaranteed growth components, the flexibility, the control, and even some of the downsides.
Right.
So where do we go from here?
Okay, so now that we have all this information, I think it's time to look at some real-world examples where high cash value life insurance can make a real difference.
I like it. Let's do it.
We can see how it actually works for different financial goals, like starting a business or supplementing your income in retirement.
All right, sounds good. Let's dive into those examples in the next part of our deep dive. Okay, so we've laid all the groundwork. We've gone through like all the details of high cash value life insurance, and now it's time to see it in action.
Yeah, let's see how this actually works.
I'm excited.
Yeah.
Let's jump into some real-world scenarios.
Okay, so imagine you're like a young entrepreneur.
Yeah.
You're starting a new business. You've got all these ideas.
Lots of energy.
But you need capital to get things going.
You need that money.
Right, exactly. And at the same time, you've got a young family to think about. You want to make sure they're protected no matter what happens.
Right. That's a tough spot to be in for a lot of entrepreneurs.
Yeah.
You know, that balancing act between chasing your dreams and taking care of your family.
Yeah, it's a lot to juggle.
So how can high cash value life insurance help with that?
Well, it can be a really useful tool to kind of bridge that gap.
Okay.
You can set up a policy that provides a good death benefit for your family, just in case.
That peace of mind.
Exactly. And at the same time, you can access that cash value through policy loans to actually fund your business.
So it's like a safety net and a launch pad all in one.
Yeah, that's a good way to put it.
I like it.
And the cool thing about policy loans is that they usually have pretty good interest rates.
Oh, okay.
And flexible repayment terms.
Compared to like a bank loan or something.
Exactly. Plus the money you borrow, it's still growing tax deferred within the policy.
It's like it's working for you even while you're using it.
Yeah, exactly.
That's amazing. Okay, so that's for entrepreneurs. What about other scenarios?
Okay, let's switch gears. Let's talk about retirement.
Okay.
So you're getting close to retirement. You're looking for ways to boost your income, but you don't want to get hit with a ton of taxes.
Right. Those traditional retirement accounts like 401ks and IRAs, they come with all sorts of rules.
Yeah, and restrictions.
And you could end up paying a lot in penalties if you take money out too early.
Right. And for some people, those accounts just aren't enough to cover everything in retirement.
Yeah, that's true. So where does high cash value life insurance come in?
Well, it offers a really unique advantage.
Okay.
You can withdraw from your cash value tax-free.
Really?
Up to your policy's cost basis.
So up to the total amount you've paid in premiums.
Exactly. And that's a big deal because with those traditional retirement accounts, you usually have to pay taxes on the money you withdraw.
Yeah, that's true. So it's like a way to maximize your retirement income, but minimize your taxes.
Right.
Anything else that makes this good for retirement?
Yeah, actually, there's a little known perk.
Oh, okay. Tell me more.
Withdrawals from your cash value life insurance, they don't count against the Social Security earnings test.
Oh, that's interesting. What is that?
So if you're still working and you're making more than a certain amount, they can actually reduce your Social Security benefits.
What?
Yeah, but the money you take out from your life insurance policy, it doesn't affect that at all.
Wow, that's a hidden gem.
It is. It's a nice little bonus.
So we've covered a ton of information about cash value life insurance.
We have.
We started with the basics, and now we've seen how it can work for entrepreneurs, for retirees. What's the one thing you want our listener to take away from all of this?
I think the most important thing is to realize that high cash value life insurance, it's not just a plain old insurance policy.
Okay.
It's a really powerful tool that you can customize to fit your financial goals, whether you want to protect your family or build wealth or leave a legacy for your kids. High cash value life insurance is something you should definitely look into.
It's like the Swiss Army knife of financial strategies.
Yeah, I like that.
So as we wrap up this deep dive, what's the next step for our listener?
Keep learning. Keep asking questions. Find a financial advisor who really knows this stuff inside and out.
Good advice.
The more you know, the better decisions you can make.
Knowledge is power, right?
It really is.
Awesome. Well, this has been a fantastic deep dive.
Yeah, yes.
We've learned so much about high cash value life insurance, and I hope our listeners feel empowered to take control of their financial future and find the strategies that work best for them. Until next time, keep diving deep and keep learning.